Ladies and gentlemen, welcome back to the channel. So in this video, I'm going to break down in simple plain English how stablecoin demand paired with these new regulations upcoming is basically about to create a massive sustained demand for US Treasuries, which is US government debt. And in doing so, it's going to pretty much keep the debt-based system alive and functioning. So the simple truth is the US Treasury market only works if there are constant willing buyers on the other end. Now, without them, demand collapses in the Treasury market. And if that happens, the entire financial system goes with it. And quite frankly, I'll be honest, I'm actually shocked with how many crypto talking heads in the space don't fundamentally understand the dynamics here and what's really going on. And they certainly don't understand how stablecoin regulations and stablecoins fit into the traditional financial system. And I'll explain that. So stablecoin demand is pretty much a strategic loophole designed to hardwire a permanent buyer for treasuries so that the system never runs out of oxygen. That's the goal here. And it's basically engineered to create a permanent buyer for treasuries so that the system does not collapse. That's basically it in a nutshell, and we'll get more in depth into it. And by the way, before I continue, if you're looking for a secure, straightforward, easy way to buy, sell, trade crypto, or invest, or even just roll over your 401k into different digital assets with various tax advantages through a self-directed IRA, I heavily consider you to take a look at iTrustCapital. So I actually use them myself. They provide institutional grade security, access to over 80 different crypto assets, and 0 monthly fees, and a simple flat 1% transaction fee. It's pretty much a solid option for anybody serious about investing in digital assets and a secure way in protecting their assets if you don't want to do cold storage or if you just want to trade. I put the link in the description. Now, moving on, let's go over exactly how the stablecoin bill is engineered to pretty much funnel capital into the US Treasuries. It's very clever. And it really starts with the new bill regulating digital dollars. That's called the Genius Act. And it is genius, in my opinion, for what they're trying to achieve. It was passed by Congress, and it was signed into law by President Donald Trump on July 18th. So on the surface, it's really cleverly marketed as a stablecoin regulation bill. It just looks like that on the surface. But if you actually go through it, buried deep in the text is a pretty strategic mechanism that forces money straight into US government debt. Okay? It's not just about rules around crypto. It's basically about building a new digital payment system behind the scenes that will funnel global liquidity and capital into the treasury markets, into treasuries by design. And this could reshape American finance forever, and I think it is. And it will also hardwire structural demand for US debt and US treasuries into the plumbing of the digital economy, which will be based on the blockchain. So this bill isn't just about, putting guardrails around crypto and just some simple things like that. It's actually a multi-agenda policy. And I'm basically going to explain exactly how it works, what's going on here, and what Treasury Secretary Mr. Scott Bessent really meant when he said in a video that stablecoins will help preserve dollar dominance. Because I think people didn't really understand what he meant. And I'll break it down for you. Because the truth is, these people speak in code. They use jargon and they deliberately use ambiguity to hide their real intentions and the real mechanics behind what they're doing. It's by design. And translation, if you want to know what he meant, is we're going to build internet native dollars that by design will soak up short-term US government debt to keep the debt-based system alive so we could keep refinancing it. That's what he meant. So the real goal here is to lock in a permanent buyer for US government debt and essentially creating a built-in refinancing machine that basically keeps the debt cycle going. So if you really look closely, you'll see it's the same system, same reliance on borrowing, just upgraded with a sleek digital infrastructure. So that's what's really happening. But how does the crypto bill become a guaranteed bond buying machine? Okay? And how does the stablecoin bill make that happen? How does it work? It starts with the Genius Act, the bill that recently got passed, and focusing on something in it called a payment stablecoin. This is in the bill, a digital version of the US dollar that's exactly worth $1. So by law, the company issuing a stablecoin must redeem it for $1 at a time. So if Ripple issues an RLUSD or Circle issues USDC, each digital dollar they create must be matched by $1 in high quality reserve assets, which is essentially government debt. But here's the interesting thing. The key legal requirement in the bill, hidden within the text, is that for every single stablecoin dollar created, the issuer, like Circle for example, must hold $1 in high quality reserve assets. Those are their words. Now, if you want direct access to my portfolio, just got to throw this out there, how I'm positioning, the strategic frameworks I use to navigate these dynamic markets, and even high level insights, combining macroeconomics, crypto analysis, and also exclusive video briefings that I do, giving my market updates on a bi-weekly basis. You can consider joining my financial market intelligence group. This is really a place where serious investors exchange ideas, anticipate market shifts, and strategically position for both risks and opportunities in the evolving financial and digital asset landscape. I put the link in the description. If you're interested in that, take a look at it. Now, moving on, here's where it gets very interesting with the Genius Act stablecoin bill. What qualifies as a high quality reserve asset, as what they said? Well, the bill strictly limits what counts as a high quality reserve, okay? And this is the critical part here. And that's mostly exclusively short-term US Treasuries. That's what a high quality reserve asset is. So you see, in the bill, the list deliberately limited options so that it funnels stablecoin reserves directly into government debt. So by default, the only viable option for these issuers is to buy short-term treasuries. And that's all these big companies can buy for the most part. So the result is every new stablecoin dollar created, essentially $1 of treasuries the issuer is legally required to buy. So that's demand right there. And that means as stablecoin adoption grows, treasury purchases must grow alongside it from these issuers. They will have to buy treasuries to have that 1-to-1 ratio. So the Genius Act doesn't just encourage demand for US debt, although it does do that. It basically hardwires it into the very rails of the next global payment system, tied into the traditional system. So build digital dollars on top of short-term treasuries, and you basically created a permanent captive buyer for government US debt. It's genius. And this is how you upgrade a debt-based system and a debt-based cycle without really fixing it. And that's exactly what they're doing. So in simple terms, more global adoption, more stable coins minted, okay? More stable coins minted translates to more treasuries purchased, and a larger treasury-backed system that basically looks safer. And this drives even more adoption. So it's like this ever-going cycle. So a growth flywheel that basically kicks in because the reserves have to be short-term, which is typically around 93 days or less. So they're constantly rolling over. And that's the key here. So this is how they'll kick the can down the road with blockchain technology. And blockchain pretty much becomes the infrastructure that makes the system now more efficient, faster, more scalable, and more global. But make no mistake, the debt-based system does not vanish, even if they want you to think that. It's just getting a sleek upgrade, and fiat currencies will continue to be systematically devalued and diluted. That is not going to change. So if you want to stay ahead of that, you still have to invest strategically. The incentives did not change just because they're upgrading the system. Only the plumbing changed. And please remember, this is so critical, and I have to say that. This video is not about fear. It's about leverage. Because the truth is, the ones who can see the system for what it really is aren't the victims. You can be the winners. And you can use it to your advantage. Because at the end of the day, in a whole market that's built on information, information is one of the most valuable commodities you can ever have, especially in financial markets with this debt-based system. It gives you an edge. So don't waste it. And I'll see you guys next time.